Ownership's the best way to build wealth, and buying a business is the fastest way to get there. Now let's talk about how raising money from investors can make everyone better off. And let's use a real world example. We have a New Jersey-based HVAC company that advertises $3 million in annual revenues and $755,000 in annual profits, and they're asking $2,850,000 to buy this business. In this example, let's assume we have a small group of investors that put $285,000 down, which is 10% of the purchase price. Now, in return for making essentially 100% of the down payment, those investors will receive 30% of the business, and the operator will receive the other 70%, but they are actually on the hook for the loan. So they're still providing a significant portion of the capital that goes into making this investment through the form of the personal guarantee for the loan. And from the investor's view, you want to make sure that each individual investor owns less than 20% of the business, because anyone that owns more than 20% is going to have to be a part of the personal guarantee for the loan. So assuming a 10-year, 10% down, 10% interest loan, the after debt payment pre-tax cash flow for this business is $348,000 per year. So the operating partner would earn about $244,000 per year. And that does not include the portion of their income that's going to pay down debt. And the investors would receive a 25% pre-tax yield on their initial investment. And again, that's not counting the cash that goes to debt payment. And then looking at the long run, let's assume this business produces no growth whatsoever, doesn't keep up with inflation. You're able to sell it for the same price you bought it for after you've paid off the loan. At that time, if you were to sell, the operator would receive $1,955,000, and then the investors could sell their portion for $855,000, which works out to an 11.6% annualized appreciation, so per year, just by paying off the debt. So the total return for the investors is about 37%. So if you add that 25.7% cash flow yield and that 11.6% annualized return, you add up to about 37% per year. And again, that assumes no growth whatsoever over a 10-year period, not keeping up with inflation, nothing at all. But what's great is there's a lot of levers that you can pull to try to drive revenue higher over that 10-year period. Most of these businesses are not run that efficiently, and there's lots of opportunities to streamline and automate processes. Most don't have a very good marketing campaign, so if you come in and you give a much more formal advertising campaign, hopefully you can bring in more customers at a lower customer acquisition cost. And then lastly, I'll teach you a little private equity trick. It's called a roll-up. And what that means in this example is, so we start with our larger HVAC company that we buy for about 3.8 times cash flow. Now, once you go in and you get your process in place, then you can start buying out smaller competitors. And typically you can acquire the competitors for, say, 1.5 to 2 times cash flow. And just by integrating that business into yours, that business you bought for 1.5 to 2 times is now worth 3.8 times. So let's say you own this business and you bought a competitor that makes $250,000 per year. You buy it for $375,000. Now you fully consolidate that business into yours. So that $250,000 cash flow would now be valued at $950,000. So that's the 3.8 times cash flow that you paid for this business. So that's a $575,000 increase in value. And you get that just because multiple is a big function of the size of the business. So the bigger the business, the higher the multiple. The smaller the business, the lower the multiple. And eventually at some point you're growing to the size where private equity and institutional money will come in, and they pay much higher prices than individuals do. Now, it's really clear that you can drive a lot of value by doing one or more of those deals per year during that 10-year period. So let us know what you think. We're a little curious if there's demand for a service that matches up investors and people who want to operate businesses. So let us know.